Cameron Watt with us from BlackRock, and we welcome you to talk about China. China up or China down? Just as a general statement, do we need to worry about China GDP?
No, not really, Tom. China rising, not China falling, but no longer, the 10% kind of comic cutout rate, moving down over time to a trend growth rate over the next few years of maybe 7 to 8%, I think, is the scene.
Okay, I want to bring up here now their foreign exchange reserves, a moonshot and a pause. And you can see here the general buildup. And I remember, Ewen, when we hit $2 trillion of China reserves, everybody had to write research papers to decide if the world's going to come to an end. And we've added another trillion. We're up to 3.3 trillion of China reserves. Should I be concerned about the distortion of 3 trillion large held by the Chinese?
Well, I think if you're the Office of the Controller of the Treasury, you're kind of glad they've got $3.3 trillion of reserves and they're actively trying to hold the currency down because, as we say, that provided 73% of the buying of US Treasuries away from the Fed in 2011. So, I think that money it has been important and remains important to Western governments in keeping bond yields low and interest rates low as the world tries to recover from the financial crisis.
And you said there's 73% after the Fed, right?
Yeah, 73% of the buying away from the Fed in 2011 was China.
That's a break exclusive. Tanya, see if you can banner that. That's an important statistic. Okay, let's look here at Renminbi with Ewen Cameron Watt, and you can see from the unpegging, here's the managed Renminbi. And down we go. Remember the uproar over this in 2005? This is logarithmic. It's a really elegant chart. We curve down, and then we pegged again, and then we come down, and we're actually a little bit above the long-range trend. Have they done their fair share of managing the renminbi stronger? Do you give them an A+ for the way they've managed their currency?
I give them an A+ from the point of view of the Chinese economy. In that, they've managed to keep the export machine going. And I give them a C from the point of view of the long-term planning because the economy's become too reliant on investment, too reliant on exports, and the exchange rate doesn't act as a pricing signal. So, I think one of the big stories of the next 5-7 years is gradual liberalization of the exchange rate and two-way capital flow in and out.
Well, the capital flows to me is just critical. Let's look at one of the real economy measurements here, folks. We don't show copper enough. Here is copper, and we've got some industrial action there. That's outside the Bloomberg parking lot. And then we've got here breaking China, not breaking the world, which is from Dr. Watt's research memo. You see the explosion there in copper in the sustained price of copper as a China metric. Do you predict that we will sustain here, or can we see industrials even go higher in price?
Well, I think that China is still consuming an increasing amount of the world's copper. And I think if you look what's growing in the economy, whether it be domestic appliances, housing still, and the intent to re-equip the whole power transmission system over the next several years, and in a world where copper grades mined are declining by 5% per annum. So you need to get 5% more copper ore out of the ground every year just to get the same amount of copper now worldwide. It's a pretty good scene for the red metal, I would say. Yup.
If we want to invest in China, what's the most effective way?
I think that there are several ways. You could buy the shares of companies that are selling large amounts of product into China. The Burberrys, the Mercedes, Coach, people like that. They're really prospering out of the growing income. You can buy exchange-traded funds, ETFs, which mimic the onshore China index. You can buy China funds. And finally, you can look at commodities. I mean, China is crucial to us globally. Its model is changing. So tomorrow isn't going to be the same as yesterday, but it's still going to be the largest piece of growth. Right.
From the Financial Times, Kenneth Rogoff of Harvard University, a sustainable currency, this on the euro, a sustainable currency union requires other country-like features, including a centralized fiscal authority that has at least as much power to collect taxes as the constituent states. How do the Chinese perceive Europe? Ewen. How do they view this crisis in Europe?
I think they see the euro as a really important currency to sustain because if they didn't have the euro, they'd have almost no diversification of dollar risk in those foreign exchange reserves, Tom, we were touching on a moment ago. I don't think that they applaud some of the structures in Europe, and they've certainly said more than they've done in terms of investing during this crisis. But I think they would prefer to keep the euro in position. I think they see it as something they want to address through the IMF and through some of the multilateral bodies where, let's not forget, globally, they're trying to get more influence and more presence.